Okay, we've had a little bit of technical difficulty. We're back. I'm not sure what that was about, but anyway, seeing this market is not a positive sign, but we still are not negative either. It's too early to call a top, and we want to watch this market a little closely. If we go down to the overbought oversold condition, as you can see, we just turned down from this area, and if we go to the MACD, which is one of our other favorite indicators, we're just looking to turn down below this line, which is not a good sign for this market. And again, silver tends to fall under two camps. It's either one day it's a precious metal, the next day it is a industrial metal. And right today, I think it's falling into the industrial camp. So let's go to our next market, which is gold, which we all want to look at. And gold made a new all-time high today. We traded as high as $1,920.50, which took out the old highs. However, it had a huge reversal. This is not necessarily a good sign for gold. We've got a negative engulfing line. Let me just put my telestrator on. We have a negative engulfing line right here, similar to what we had here. And there we had a $200 break. Now, are we going to get a $200 break? I don't know at this point in time. It's too early to call a top, but we are looking for a top in the third quarter. And also, the other thing that's really interesting in this market, which I really want to bring to your attention, is let me just clear everything off the screen again, and we'll just go to a very simple line chart, and you'll see what I mean. You see how this market really, that's the previous all-time high close. We got there yesterday. We're not following through today. Somewhat concerned. I would be a little disappointed being long the market, plus we're coming from an oversold condition, plus we're at the top of the Donchian trading channel, which sort of reverses markets. But again, all of our indicators are plus, 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 and indicating that the trend is still clearly up, and it's too early to call a top. But let's see, we may see some more sideways action and then eventually a move up over this level. If we move over the $1,900 level convincingly in the next week or so, then I think we can take the $1,750, add it to this, and I think that takes us well over $2,000 an ounce. But let's see how that works out, and let's go to our next market, and that's going to be the crude oil market. I'm going to put this on a candlestick charts because I think I like to look at those. I think they give you a lot more information. But you can see we were talking about this market last week, and we were talking about this area in particular right here. Let me just get my telestrator on. Right here, which we thought was the top of the Donchian channel. Well, that's proved to be true. We've come back from around the $90 a barrel back down to 84 and change. Again, we've also hit the parabolic, which is a stop and reverse, indicating there's more pressure on the downside. Now, clearly around the $80 a barrel level, right around here, 81 to 82. You're going to find some support. So let's see how that plays out. But generally speaking, the indicators are mixed. The monthly's down, the weekly is up, and the daily's down. So you've got a mixed picture. It's a 65. Whoops. It's a 65, which means you really want to be in a trading range using the Donchian trading channels as well as the Williams percent R. Let me just clear everything off the screen and show you the Williams percent R. And that is not yet in an oversold condition. So what you ideally want to look for is a market in an oversold condition like here, out of the channel, and look for some sort of pop, some indicator you've made a turn. This is obviously the indicator right here, and you can usually ride it for a little bit. Same thing here. You had the out of the channel a little bit, the major down, the big down day. That was on, let me give you the date on that. The big down day there was on the 2nd. And of course, we've fallen back as well. So I think that's something to look at. If we get in an oversold condition, let's say down here somewhere, then I think you can really look to maybe buy this if the market's back down towards this 80 level, towards the bottom end of the Donchian trade channel. So let's go to our next market. And this is really the big story of the day, and this is the dollar index. And I want to show you on a close-only chart because I think it's a better story. And let me go out a little further. And let me just take off these other indicators because I think they could be a little bit confusing with all the lines here. So here's a very, very simple chart. This is all of our trade triangles now positive. The weekly, monthly positive, daily positive, so plus 100, very strong trend. But this is a key level. I'm going to draw this on with my telestrator again. It's a key level for this market to look at, and this is right here. And the highest close you've had in this index is 76.10, and that occurred right here. And this was 75.98. So again, that's, I think, those two. So this was 76.10, and this is 75.98. We're currently trading at 75.98. So this is definitely an area we're going to have some problems on, in my opinion. But I think we're, as you can see, we've had these lots of starts, these ups, boom, not unlike here, boom. And I think we can see sort of more backing and filling. But generally speaking, I mean, the euro, and this is a basket of currencies. It's not just against the euro, it's a basket of currencies. And I think generally speaking, we could see this market perhaps do better, but we need to see some confirmation. If we go over and have a nice close, let's say it's 76.50 like here, then I think we can basically start looking for this market to go up to about the 80 level, which would be a really nice place to be. Let me just clear everything off the screen and give you a picture. Have we been there before? Yes, we have. And can we go there again? Yes, we can. So 80 would take it back up to these levels seen in the end of, or the beginning of 2011, the end of 2010. So that's what I would not be surprised. Could be a nice move. And again, things change in the market, so don't suddenly you're thinking about the dollar getting back, the economy is so bad here. It may be the better of two evils. I mean, whether you want to hold a euro or some other currencies or the dollar. And I think that's what we're looking at now. But a lot's going to be decided, I think, when President Obama comes in on Friday. And to do this, again, I think we'll have to look at it. So let's go from here. Let's go to our next market. And I'm going to look at the CRB index, which we've talked about before. And I'm going to put a candlestick chart on there. And I'm going to put our other indicators. I'm going to go to a 6-month chart, actually a 3-month chart, and I'm also going to put our on-chart studies, the Donchian and the parabolic. And as you can see quite clearly, when we're up towards these levels, we're at the top of the Donchian trading channel. So as you said, when it gets up there, it tends to come back in. Here's another good example of how that worked. Just like if we go down here, we can see we're out of the Donchian trading channel. We came back in. Boom, you had that. I think we probably had a buy on a very short term. Let me just put the dailies in here for a second. Yeah, we got a buy right here at 323. So you can catch some short-term moves, but these are just short-term moves. You just don't want to be married to them. And again, here you had a sell at 36.41, currently trading at 32. So again, you're coming from an overbought condition. You had the signal on the daily. This is the daily triangle. And here you had signals. And do they always work out? No, of course not. But the reality is you want to go to the extremes. Overbought here, oversold here. And that's really where you can help get things started. Now, we started the broadcast. We may have had a problem starting the broadcast. I'm not sure. So I'm going to repeat some of the markets we went through earlier, just so nobody misses anything. If you've watched up until this point, then no problem. You may want to just jump off and go to our website, MarketClub.com. If you're not a member, I recommend you taking a trial. We have a special $8.95 for 30 days. I think you'd really like to test out some of the tools we have there and some of the trades. And also, let me go back to the beginning now. How I started was this, so it's going to be like deja vu all over again, but let me see, because we said we started the broadcast earlier and we had some problems. So here we are. It never seems to go away, does it? What, of course, I'm referring to is the problem with the economy and the sovereign debt problems in Europe. It would appear as though no politician wants to touch these major economic problems with a 10-foot pole. Of course, like everyone else on the planet, they are concerned about protecting their own jobs and getting reelected. The market action in the equity markets can only be described as negative today. Gold may be having a major reversal, which we just described a little while ago. And lastly, the dollar is soaring to its best levels in quite some time. Like I said before, the markets are never boring. Now let's go to the 6 major markets we track every day and see how we can maintain your wealth in 2011. Well, here we are. We're looking at the S&P 500. You may have seen the earlier one. I'm not sure if it actually came through, but we're going to redo this for you. But we've just fallen below the parabolic SAR. We're sort of mid-range. We're not oversold yet, and we're getting there, but we're not oversold yet. And obviously this level here, this 1120 area on the S&P 500, major support. If we go through that, then we're going to see this market go significantly lower. If you watched our analysis this past weekend, we were looking for the S&P 500 to potentially go to 600 in the next 12 to 15 months. So something to look at and really ponder. This is, a lot's going to depend on what President Obama has to say or how the markets perceive what he says. And that's the other key thing, is what the markets perceive and what they believe will happen. So I think that's one of the key elements I really pay close attention to. So let's go to our next market. Next market is going to be silver, and you have to be somewhat disappointed with the action in silver today. We certainly did not make new highs like we did in gold. We sort of reversed dramatically, and we're down on the day. And I think that I would have to say is disappointing. So let's go to gold, which is the big market everyone's keying on. And this is what we're seeing in gold. I'm going to put the illustrator on. And we had what I can refer to in Japanese candlestick terms. This is a negative engulfing line. Today's action is negative engulfing line. When you have the body of the candle, the red body, engulfs basically the previous candle, in this case a blue candle. But this is the same action we saw back here in this preceded a $200 pullback. So I think this is very serious. The action is disappointing because we traded up as high as $1,920.50 today in the spot market, and we've just come right back down. Very disappointing if you're long in this market. Let me just take everything off the screen and go to our oversold indicators. We're just overbought. The other indicator is very flat, but it looks like it potentially could be turning down. I would be very careful in gold today. It's too early to say it's an absolute top, but the market action has to be disappointing given all the economic news around the world. So let's go to our last market. I think you've seen all the other markets since we had our little mini restart here. So next market is going to be the crude oil market. We have a minus 65 here, indicating a trading range. We talked about the top of the Donchian trading channel right here, which is really kind of was the top. We've come back down. We've had the mini SAR parabolic indicator gave a sell signal yesterday. We weren't open, of course, but the markets never stop, and we are not in an oversold condition yet. So something to really pay close attention to. Plus, with the MACD, we're just beginning to turn down. So, hey, we sort of had a roundabout way to get through all the markets today, but this is Adam Hewison. Thanks for taking the time to stop and listen to what I'm saying about the markets, and I hope it's helpful to you. And that's our mission at Market Club, is to help you become a better trader, and I think we do that through education, also personal coaching, as well as learning how the markets really work. Not listening to what the pundits, the newsletters, people are saying, but really focus on how the markets work and how you can make money and protect money, which is an important thing. Hey, it's Adam Hewison. I'll see you tomorrow, 1 o'clock, right here on Market Club. Every success.